Good morning, good afternoon, and good evening, folks. If you guys can hear me well, and if you guys can also see my screen, please do give me a sound check and a screen check by saying yes or no, so that we know that everyone in this room can see everything and they can hear me loud and clear. So feel free to let me know, all of you, if you guys can hear me. Great. Thank you, Kenneth. As always, greatly appreciate the response from you and from everyone else who is in a process of writing and have already written. Thank you once again for joining us for this series of masterclass, which we hold every Wednesday at 1 p.m. London time. And every Wednesday, we cover various different topics, covering indices, stocks, cryptos, and of course commodities as well, which will be coming very soon. And in the future, in the not too distant future, I will also be starting masterclass on Forex as well. So that will be quite intriguing for you guys as well, because there are some really intriguing moves taking place in the Forex market. I think it is a must for us to start looking at them as well. But I try to keep them a bit more on the topic. So for example, right now, the biggest worry in the market is mainly about a recession, a looming recession. Hence, we are going to focus on the stock market today and looking at some recession-proof stocks and the opportunities within the current sell-off, where you can really look and dive deep into that particular sector to find those particular opportunities. So with that said, now let's begin. And a bit about myself. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America. Many of you may have seen me as a regular TV guest on CNBC and Bloomberg, where we cover our weekly slots, discussing cryptos, commodities, Forex, and macro policies. Currently, I provide as services to AvaTrade as a chief market analyst, and all the analysis on a daily basis that you read on our blog. If you are not reading, I highly recommend you guys to do that. They are written by me, including the technical analysis videos. Now, speaking of the social media channels, here are some of the handles for our social media, such as Telegram, Twitter, and YouTube. The recording of this particular webinar will also be available on our YouTube channel. So I do recommend you guys, if you guys do not follow some of the information here, to go and revisit some of those points, and do come back and then follow up with questions. I am fairly active on my Twitter account. My Twitter is Naeem Aslam23. So I'll be more than happy to answer any questions that you may have. Now, something that I wanted to discuss with you guys is about AvaTrade's unique technology. It is called AvaProtect. AvaProtect is a revolutionary one-click risk management tool available on the AvaTrade web trader and AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading accounts. The only cost is the AvaProtect fee itself. Now, let's begin with some of the housekeeping questions, and that is the risk warning, which is right in front of you. If you have any questions, please feel free to get in touch with your own account managers. I just wanted to highlight that nothing in this particular webinar should be considered as an advice. This is purely for education purposes as well. Now, are you guys ready? If you are, then do download the platform from AvaTrade's website, or you can just use the online service as well, which is called Ava Web Trader, which I will be using later in the video to do the analysis. Now, the agenda for the markets. Now, obviously, markets are very much worried, and there's a lot of jittery in the market about the current state of the market, recession taking place, which has really pushed the indices such as the S&P 500 index well below their 20% from their all-time high, or shall we call it in a recession territory. Now, of course, S&P 500 index isn't the only index which is trading to the downside. We also have the Dow Jones Industrial Average, which is also trading well over 20% from its all-time highs or in recession territory. Then you have the index which is really getting beaten down quite a lot these days, and that is your tech index. No matter which tech stock that you pick up, you will see a lot of weakness in that particular stock, and that is having massive influence on the Nasdaq index, which is down well over 25% or well into its bear market territory. All of these three indices are indicating that a recession is highly likely, and the upcoming quarter is going to bring a lot of volatility for the stock market, or shall we say the ride is going to be enormously bumpy for investors and traders. Now, any questions in relation to that? Now is the opportunity for you guys to ask that particular question. Now, of course, the situation is very similar to in other markets as well. For example, in Germany, the stock index is called DAX. It is also down substantially from its all-time high. In the UK, London, where I am based, we have the stock index is called FTSE 100. FTSE 100 is also down substantially from its recent highs and also trading into its bear market territory. And then you have the stock 600 and stock 50 for the European stock indices. They are also trading massively down. The theme is the same, and the theme for these particular stock market is that a recession is on our doorstep, and it is coming regardless you like it or not. And the reason that it is coming is primarily because of two reasons. Number one is soaring inflation in the United States, soaring inflation in the United Kingdom, soaring inflation situation also in Europe as well. So no matter where we look, inflation is very much on the rise, and we don't know when we are actually going to see the peak of that one, as many investors believe that there could be few months or quarters before we see that. The other one is the hawkish monetary policy, meaning the Federal Reserve or the central bank over in the United States are very much tightening the monetary policy, increasing interest rate, reducing the size of money in the market, and that is also leading to this recession worries in that. And something which is also quite important is weakness in the economic data. If you look at the economic data, no matter where you look at it, no matter whether you are looking at the European data or the US data, you see the way data showing clear weakness, and that indicates to us again a recession is highly likely. Any questions on that, guys? Okay, let me ask you this particular question. How soon do you think, actually, let me ask you this particular question first. How many of you guys think that a recession is really going to happen? Miles, that's a very, very good question. I will answer that question in a bit. So the question that I am asking everyone, okay, so Miles is saying 50-50. What about everyone else? We got more than 50 people in this one. Lawazi is saying that I don't think it will happen. Okay, I'd love to hear your reasons why you think that it will not happen. What about everyone else? Or you do think, sorry, okay, you do think it will happen. Okay, okay, that's good. And anyone who thinks that a recession is not going to happen. So, Kadalia, are you saying that a recession is not going to happen, or is it going to happen? Because you said yes. So I'm not sure. Is that yes? Is like recession not going to happen, or is it going to happen? It is coming, Kadalia is saying yes. Oh, okay. So I have yet to see. And YC is saying going to happen, but severity will depend on the current crisis. Absolutely, very, very well said. So a recession is highly likely, with 90 to 80% chances that a recession is going to kick in the third quarter. As we go further into this particular year, and that can really happen in July and August, we could see the recession really taking place. And then perhaps towards the end of quarter three or early quarter four, we could see easiness, or that recession easing off by that particular time period. So the next two quarters are going to be highly volatile, or the summer is really, really going to be volatile for the equity markets. Now, the question really is how deep that recession is going to be. I think that recession is going to have a pretty serious impact on the economy. Why? Because disposable income is massively eroding. Just look at your daily lives. How much money do you have, disposable income you have left in your pocket after going and then buying all the daily groceries that you need to, paying your bills and other expenses? Every single day, that extra money or the saving that you used to put in your account is really shrinking. So that means if inflation cannot be brought under control, then the chances are that this recession is going to last for some long period of time. But still, the balance sheets for most of the banks, the balance sheets for most of the companies are still looking solid, and the unemployment isn't really that high. All the companies have started to lay off people, and if companies continue to start laying off people, then the recession could be quite big and quite deep. So these are some of the factors that we've got to really pay attention to. Now, of course, in terms of sectors, the second important part for our conversation, that which particular sector is really booming or which particular sector is really going to the downside, there is no doubt that there's one sector which has seen pretty decent flow coming in the last few quarters, and that is your energy sector, right? Your energy sector in the last few quarters has seen very, very decent flow coming in. That E is a very, very funny one. So let me just make that a little bit more better. It looks like a G. And the sector which has been under massive sell-off is your tech sector, because over the last few quarters, and so again we have seen massive momentum moving to the downside in terms of the sector. So again, the arrow over here is to the downside. The arrow for the energy sector has been very much on the upside. Now, a sector which we believed that could really see a pretty decent momentum to the upside could be banks, right? But banks have not really performed that well, given the fact that the Federal Reserve is going to increase interest rate, and that should really improve their profitability. So overall, the banking sector has been very much consolidating, or with a view of a little bit skewed to the downside. Now, if we look at the any other sectors like consumer staples, consumer discretionary, consumer staple is very much in demand. Consumer discretionary is very much in the moving to the downside. Now, construction sector is again still very much holding, but again, I'm not very optimistic on that, given the fact that interest rates are rising. So we should see a slowdown in the housing market, in the construction industry quite well in the coming days. days. Now, let me go over some of the questions that people are asking me, and then I need to pay attention to them as well. Oscar has asked me, hello, do these two reasons have also effect on Bitcoin? Certainly, inflation is having influence on Bitcoin. Certainly, monetary policy is also having influence on Bitcoin. Bitcoin should. We did an interview with Al Jazeera myself yesterday on the Inside Story, so I would highly recommend you guys to watch it on YouTube. Al Jazeera Inside Story. If you just type my name and it should come up. But my biggest concern is that with the inflation at 40 years high, we should see positive momentum. We should have seen positive momentum in Bitcoin price, but that is not what we saw. We saw Bitcoin prices actually plunging and then now down more than 76% from the all-time highs, only 10% away from that 85% drop that usually most of the traders and investors will talk about. So that is a concern. Now, monetary policy is certainly, a hawkish monetary policy makes the dollar index be more stronger, and that is also pushing Bitcoin prices lower. But of course, then you have a Terra Luna, then you have stable coins, you have a yield products, everyone else within that space creating quite a lot of pessimism in the market. Now, Cordelia is saying food and utilities are costing more already in South Africa besides fuel hikes. It is the same, Cordelia, in the United Kingdom as well. Every time I go to Marks and Spencer, every time I go to Morrison, Tesco, my bill is only moving in one direction and my products are moving only in one direction, meaning I'm buying less products and yet I am paying higher prices. So the situation is the same for around the world, really, in terms of that. And unfortunately, it is about to become a little more worse because of the agriculture crisis, really, which is very much looming. Right. Okay. Now we have only about 13 minutes left, so I do wanted to do a lot of stock analysis as well. So special stocks, as we discussed earlier, so we'll be discussing some of the recession-proof stocks. That is your consumer staples. Then we'll be talking about energy crisis. So that means your energy stocks, which are doing pretty well. We'll be discussing some of the stocks which are very much influenced because of the war taking place between Ukraine and Russia. A hawkish monetary policy, how that is very much influencing a sector, which is your banking sector in the market, and of course the tech sell-off with companies like Amazon, Walmart, Google, Apple, Netflix, all of things, FANG stocks, how they are getting absolutely hammered, and if there is an opportunity really in that particular as well. In addition to that, I will also be talking about two more sectors, and that is your airline and pharma sector as well. Now, of course, pharma sector was a very, very intriguing sector that we did previously when we used to cover COVID in a lot more detail. But now the fact that we have shifted our focus and we are talking about more about the energy crisis, recession, and all of that. So that is the biggest focus among investors and traders. So now let me bring out the AvaTrade's web trader, and I will share the screen with you guys again. So we will see that how exactly it really is that panning. So let's start with the consumer staples. So consumer staples, you really wanted to look at Walmart. Walmart is a stock which has performed quite well previously in the previous crashes, because investors and traders tend to, favor this particular stock quite well. So when we look at the weekly time frame, the week of this one, we see there's a massive plunge in this one. This particular plunge that has happened over here, let me bring out my pen once again and then choose different color this time, maybe red over here. So this particular sell-off that has happened in Walmart is because of the warnings coming from Walmart saying that consumers are not investing, consumers are not spending, just like how a person earlier mentioned, that the utility bills are going higher in South Africa. Utility bills are obviously going higher. That means you're spending less when you are going to Walmart or your local stores. So those are the warnings which were issued by Walmart and that they are very much impacting them. Now the question really is, should we buy them? Because if a recession is here, this particular sector is highly likely to see pretty decent demand. So in relation to that, yes, so the first support zone in relation to this one is where the markets are trading right now, and that is from 116 to 120. Now because this is a support zone, and I'm going to make sure that we continue to do that, we're going to continue to change the color for these ones to green, so that things are very much in line uh, with our thesis. So when we look at the chart, we know that which one is which. Okay, so again, so this is our first support zone. Now if this particular support zone doesn't hold, then our next support zone is going to be right around this particular price level, and that is that 81 to all the way to this consolidation of 87. Again, let's change the color for this one to that one. Now why the prices would drop to all the way to 80s? One, because if the market continues to drag to the downside, which is likely the scenario, of course we will see these particular stocks moving to the downside as well. But the sell-off in these particular stocks is going to be a lot less than anything else. So really you wanted to focus on these particular price levels. If you wanted to consider another price level before that, then you could equally consider this particular one as well, 102 to 106. So you have two of these ones really over here which you can focus on. Now something else which we wanted to, okay, I don't have it here, but apart from Walmart, we can also consider Target as well. We could also consider Coca-Cola. That's again, you're sort of for consumer stable stock, which also tends to perform quite well during the times of recession. Is it or Colgate? All of these stocks are very, very good recession-proof sort of stocks. So again, keep an eye on this particular stock price as well. So what we're really going to see in terms of the support zone for this one is really going to be in around that particular price level of 33, currently trading at 51. I think this is a pretty decent area of support. But before that, we do have another area of support which was recently formed by the price action, and that is your 42 to 44. Again, let's quickly change the color to green to keep things same for us. Does that make sense to you guys, that how we picked up Walmart and then how we picked up Coca-Cola? I mean, I would have loved to see the Target stock as well, because Target's price action is very, very similar to Walmart. But on AvaTrade, we do not have that one. But on the MT4, you will see Target for sure with us, and then you will see the price action doing the same particular sort of a price movement as well. Now, after that one, let's look at the monetary policy. Now, we know that the Federal Reserve is increasing the interest rate, so that should have a positive impact in terms of the banking stock. But that is again not what we're seeing. We're seeing a momentum to the downside. So what is an interesting area of support is right over here, which we have circled it before as well on our analysis. So I will be very much looking to see the prices coming between 28 to 30, I would say, to see that price action coming over here. And then I think this is where we could see the biggest support really jumping in as well. But it's not the only point, it's not the only price action to the support level in terms of the price. We do have another support level which we also need to pay attention to as well, and that support level in terms of the price action is going to be near that $20 price level, just right over here, that $18 to $20 price level. And right over here. So keep an eye on these two particular price levels very much so going forward, because we believe that these potential areas could really trigger some buying action in that. But overall, banking stocks should have seen pretty decent surge, but because of the fear of recession is very much driving the prices lower. Now, what about Goldman Sachs, GS? Okay, so what's happening with Goldman Sachs is the exact copy of what is happening with Bank of America. prices are moving to the downside. Now this is very much of a volatility, so but not much of a sell-off really over here. So the sell-off isn't really that bad. So in terms of the price action, what we are really looking at is the prices to come between 187 to in around that 100 and 97 or 200 price mark. So this is a really good area of support. The other area of a good support is right at the consolidation area of here, where the prices are trading over here, but I am not too comfortable keeping my price level at this particular price point, because I think the better level of support is where we have marked our support zone over here, and that is between 184. This one again, let's change the color to this one to green. So that is between 184 to 202. Now, once again, I wanted to repeat myself. The banking sector should see a very decent rally once the market becomes a little bit more stable, because we are in an environment where interest rates are moving. The current sell-off is mainly because of the recession fear. So now, speaking of the recession fear, an area of the tech stock have been massively oversold over the last number of weeks and quarters. So this was the area that we've discussed in our previous videos. Between 1984 to 2096, the price did actually touch this particular line. It did actually touch this particular support zone, and it actually did move to the upside after touching that. As you can see that the price came and then it did move to the upside. Now it is trying to reconfigure its price action around that one. If it holds, great, and if it doesn't, the next area of support in terms of the price action is right over here in front of you, which runs between 1688 to 1837. So keep an eye on that one. Now let's look at Amazon quickly as well. Now Amazon, obviously there has been a stock split in terms of that one, so the prices have really changed over that. So I think there is no point of really looking over there, because there's just a massive stock split. But let's look at Apple, because Apple is a very another stock which is quite an interesting one, and it has, it also had like the stock split happen. Now in terms of the price action, where we could be potentially looking in terms of the prices to move, I would really say that 103 price level all the way to 117, sort of this consolidation area marks it pretty big for us in an interesting area to look at. Now, streaming industry, Netflix is a very interesting stock. It has moved lower quite substantially on the weekly time frame. We do not have even the data to go back that far, so we will look at that on the MT4 platform to bring out a little bit more data. But what we could do is we could bring maybe Disney over here, another stock in the same area, and then see if we have a track record showing some in relation to that. Again, on the weekly time frame, you can see that we can only go back up to 2020, and then not far from that. So again, I think I'll just do that on the MT4 platform if we do get a chance to do that. But after that, Meta is another stock, or let's say Facebook, which is massively oversold, right? And then the area of support that we have picked up previously was right between 138 to 156. Prices have come into that area, and then they are trying to bounce back from this particular area, but there could be still bit more move to the downside in relation to that, so we should keep an eye on that one going forward. Now Chevron, energy sector, as we all know that energy sector has been moving to the upside. Again, we've seen a very decent increase in this one in terms of a support, because now the prices have started to a little bit ease off as energy prices are moving. So what an area to buy would really be around that 131 to all the way running to the top of this particular consolidation area, and that makes that 138. So 131 to 138 is a great area to support, to find that support. If it doesn't work over there, and if it continues to move lower, then the next area of support in terms of a Chevron is going to be between 93 to 104, and then this is where I believe you guys should be very much paying attention to with respect to buying that particular stock, right? Okay. because I think that if prices move over here, this could be a really good area to buy. But right now, the stock is very much in a strong upward momentum, and we are likely to see that momentum moving forward. So if stock by chance comes into 131 to 38, could be a good area to keep an eye on. Right now, we've done that one. Now let me just bring any other stock which we probably talked about over here. Amazon, we've already looked at it. Alibaba, okay. So let's look at Boeing. Okay, so the sector in the travel sector. Now again, the recession fears. This particular trade, that movement to the upside, this was primarily because traders and investors were thinking that travel is coming back. This is going to be really good for the industry. So we see this upward momentum. But then again, recession fear has started to drag the market prices lower for Boeing, and that is exactly what's happening in relation to the Boeing stock. Now, in terms of our price action, in terms of how far the prices can really fall, we will go into a slightly bit more different area to look at, and then see from there onwards if we can see it. Again, I think this area of that 100 could be quite an important one to look at. Look at this price action. I'm sorry, guys, we had to run this one quite fast because we have a lot of stocks to run over here. But I highly recommend you guys to go once again of the recording for this one and go onto our YouTube channel to see the recording of that one. If you have any questions, please feel free to get in touch with us, and we'll be more than happy to do that. Otherwise, we will certainly be in touch with you guys next time. That's all for now. See you guys next time. Thank you for your time.